You're here to learn how Dropbox's acquisition. You're here to learn about how Dropbox's acquisition of DocSend can help make you rich. Today, we're going to take a look at it. A couple of days ago, I did a quick video on, wasn't that quick actually. A couple of days ago, I did a video on how Dropbox's seemingly garbage earnings from the last quarter are actually probably a positive thing going forward if you're a long-term investor in the company. I've been following Dropbox on the channel for a little while now. I've talked about Dropbox Spaces 2.0. I've been involved with the beta. Click up here if you want to see the video of me playing around with it, if you want to kind of see a little bit about some of the potential that might be available on it. It's still in beta, so not really a complete product yet. But it's really interesting to see how Dropbox over the quarters that I've been following it seems to be pretty undervalued by the market. It's not a sexy stock. It hasn't gained memery level. And so pretty much the stock doesn't do much. It stays between 20 and 25, just kind of floats around there. But the good side of that is over the last couple of weeks when we saw huge sell-offs in a lot of tech companies, Dropbox didn't care. It just kind of continued. A lot of people were taking advantage of that opportunity to add to their portfolio around 20-ish bucks, which was pretty cool. Check it out here. We have the stock price chart. This shows the 6-month chart. Typically, I'm looking at companies for kind of at least 6 months, if not, 2, 3, 4, 5 years. But yeah, just kind of floating around 20, 25 bucks. Speaking of sell-offs, let me know down in the comment section which companies, if any, you were buying during the sell-off the last couple of weeks. I took advantage to add a little bit of Square, Tesla, Apple, Dropbox, Skills, Tattooed Chef, ArcG, and a few others as well. Let me know down in the comment section which ones you're following, and I can try to tailor the content of the channel to follow those a little bit more closely as well. Check it out here in this Yahoo Finance article. It says, our latest available data shows that Dropbox has returned about 5.81% since the start of the calendar year. In comparison, computer and technology companies have returned an average of 2.58% after all of that selling off that's happened over the last couple of weeks. It goes on to say down below that, looking more specifically, Dropbox belongs to the internet services industry, which includes 50 individual stocks and currently sits at 116 in Zacks industry rank. The group has gained an average of 13% so far this year. So Dropbox is slightly underperforming the industry up until now. I think this article was written on the 9th. So we're still seeing that Dropbox is like not really exciting, and a lot of times when I put out videos, people are like, dude, I've given up on Dropbox. If I had my money in a company like Skills that like doubled or tripled in prices, that would have been a lot better. Dropbox is stupid. I did mention in my video last week about during the sell-off, if people are panicking, if you're losing sleep at night, it's good to have companies like Dropbox or Costco or things like that in your portfolio to provide some stability. But going back to the last video on Dropbox, I mentioned the $1.3 billion convertible note. A lot of people have been asking me like, dude, what does that really mean? You said it's like good for investors of the company. What does that really mean? So a convertible note, typically, like let's imagine you and me are starting up a company. We're not IPO, we're not a public company. People can't buy stock in us, but we're growing. We have a product, it's happening. But one of the things that often happens with private companies, especially when they're really small, is that it's hard to value the company. If it's just you and me and we have a cool idea and it's like we're still developing the software or we're still figuring out how to patent it or whatever, you can't necessarily say our idea is worth $800 million or anything like that. And so they'll say, hey, investors, not the stock market, but hey, investors who want to invest in us, give us this much money and we'll give you a convertible note. And in the future, when we do go public and set up a share system, your convertible note will switch over into shares. And that can end up being really appetizing for people because in some cases you get interest the whole time. But if you end up getting a big portion of the company and you're kind of one of the owners, then that works out to be really nice. And so in Dropbox's case, the management is like, dude, the market is only valuing us at 20 to 25 bucks. What is the deal? So the management said to the public, hey, we will sell you, basically, it's the same as saying we're selling you stocks for $35 to $38 in 2 to 3 years. And if you buy now, we can use this money to grow faster. And in the future, you will get stocks at that price. So investors who want to get a small return on their money, as well as potentially really, really cheap stocks. Like if Dropbox 60 bucks in 2 or 3 years, they're getting it for 38. So basically that's management saying, we know our stock is worth more than 25 bucks. It's worth at least 35 or 38. So they got all this money, 1.3 billion bucks. It came in. They turned around and used that to buy 200,000 shares back immediately, which gives some like a small boost to the current existing stock price. And then they also have a bunch of cash sitting around, and they used $165 million of that to go out and buy a company called DocSend. And then I think they were still left with something like $900 million after buying a bunch of shares back and buying DocSend. And so they're sitting on a bunch of cash, and now they're going to be improving their margins even more, improving their reach even more. And so the management is like clearly very confident that they'll be able to grow the stock price pretty aggressively into the coming years here. So check it out on this HyperChart. If HyperCharts are interesting to you, check it out down in the description. We have a link over to HyperCharts. So continuing on that line, we've been watching that Dropbox is a cash flow beast, and they just shrank down their expense footprint by launching their staff into permanent work at home. They're consistently pulling 70% plus gross margins and 5%-ish operating margins, as you can see here on this HyperChart. And they're also showing recently 13%-ish year-over-year revenue growth as well, which is pretty exciting. They did also end up acquiring HelloSign at the beginning of last year, which seems to have worked out to be a really good deal for them. They're not necessarily saying, hey, because of this acquisition, this is how much we've grown. Because, of course, when you're buying a new company, you're hoping to see multiplicative benefit over the coming years. But they're probably seeing material market share growth from big competitors like DocuSign, which is really exciting. And so Dropbox's vision is to kind of end up becoming the one-stop shop for small business. And HelloSign is one way they can do that. And coming up soon, DocSend will be another way to complement their suite. DocSend does offer a little bit of overlapping functionality to HelloSign, but they offer a bunch of other stuff that seems pretty neat, actually. Like when I was looking into it, I was like, dude, I could figure out ways to use that in my own company's workflow when I'm sending stuff to clients too. So let's take a look at what DocSend even does so we can understand better how this will fit into Dropbox's suite and how that might help them to grow going forward too. Check it out here. Never send another attachment again. The secure document sharing platform everyone can use. Goodbye attachments, hello links. Get instant actionable feedback and latest version always. So one of the bummer things that happens when, like, for example, sometimes I do photo shoots, I'll take photos of my clients and send them like a bunch of files. I might find out later, for example, like, oh, dude, I forgot to like clean up this part of the photo. I got to send a new version. And then I have to send them a whole new email being like, dude, sorry, I jacked that picture up. Here's a better version of it. And if that happens 2 or 3 times, it ends up looking really clunky. But instead with DocSend, what ends up happening is it's kind of like having it on a website. Like I can update the website without notifying the client. And another neat thing is like I've started a bunch of websites before in the past, and you can use companies like Google Analytics to track like what people are doing on your website. So how long people are staying on your website, how many times they're clicking onto different pages, which pages are viewed the most. Like you can track all of this information on a normal website, but you can't really do that with email. So DocSend basically sets it up so that when people are opening attachments, like let's say I sent you a huge PDF explaining all about this company I'm about to launch because I need your investment. You can now follow how people are moving around in that document, how much they're reading, how much time they're spending in the document and stuff like that, as if it was like a website. So this is really helpful for understanding how to optimize your emails. Next slide, seamless on-brand viewing experience. So branded viewing experience, no software needed and no login required. And so with a lot of other services, oftentimes you say, hey, just log into this site and then you can see everything that's going on. And people are like, dude, I don't want to waste the time to log into something. I don't want to have to give out my email address again. But with DocSend, it's just like a smooth, seamless experience. Modern virtual data rooms, complete e-signature functionality. And then they go on to list a bunch of testimonies talking about how this has raised efficiency, how this has really saved small businesses a lot of time, and things like that. And so when you take a step back, think about HelloSign, think about DocSend, think about Dropbox Spaces, and the already existing 800 million customers that Dropbox already has. Probably this is going to end up being a pretty neat combination. I've expressed frustration before at Dropbox for being a bit too limited and showing that they're not awesome at converting their 680 something million non-paying users they have. Check it out here. They show 700 million plus registered users, and 80% of them are using them for work, but there's only 15 million paying users. So the other 680 85 million users aren't really paying for anything. But I think adding on more and more services like this will make it easier to convert some of those people. And on the flip side, for people who are already using services like DocSend, they might not be familiar with Dropbox, or they might not like Dropbox, or like HelloSign, they'll say, if you're already a paying Dropbox member, you get even more functionality for a cheaper price by bundling things. This can end up growing Dropbox's paying customer base even more. So as we've seen Drew Houston and the team making smooth, calculating choices that aren't really highbrow enough to get Wall Street or retail investors at large to pour into this company, we are seeing solid growth, and I'm comfortable in continuing to build my position in this company for the long term. Check it out here. Revenue going up, free cash flow always going up, non-GAAP gross margins and operating margins going up. If you want to learn more about that, click on my last video up here. So yeah, what do you guys think about it? Does that sound exciting for you? Do you see how that kind of fits into like the big picture vision of helping small businesses, helping the transition to working at home going forward? I feel like Dropbox really could be a big player moving forward here if they continue to make these moves, even though they're, less than a $10 billion company. I'm excited for the impact they're going to have on my portfolio. Looking forward to hearing your thoughts down below. Let's get in touch. Let's stay in touch. Have a great week and or weekend. Stay safe and healthy. Love you guys and talk to you soon.